Yeah, they said Rajesh starts up a new business on 11 May 2017. He purchased a homewares shop, including certain assets and liabilities from the previous owner. The following is a list of assets and liabilities purchased. Property, 15,000. Electricity due, 170. Inventory, 7,960. Trade payables, 960. Trade receivables, 410. Overdraft, 3420. An overdraft is a credit facility that allows a business to, a bank, a customer or a business to withdraw more than its available bank balance. Then equipment is an asset. So they say Rajesh paid for the net assets from his personal bank account. The net amount paid is regarded as his capital in the business. So there's a capital, which is from the net assets. And when you talk about net assets, the formula for net assets is total assets minus total liabilities. Total asset minus total liabilities. So here we're going to have our journal, which is this. So we're going to have the debit side and the credit side. The debit side is going to contain both assets and expenses, and the credit side will be liabilities and revenue, if there is any. So we have the debit side. We have property, which is 15,000, equipment, which is 11,640. We have inventory, which is stock, 7,960. Then we have our trade receivable, our credit customer. Those are the debit entry. Then on the credit entry, we're going to have overdraft. We have trade payables. We have electricity due. That is accrued. We call it accrued. Due. That means what you have used that you have not paid for. Okay. So that's all about it. Then the total asset is 35,010, and the total liability is 4,550. So they said the net asset.
Tell me how you bring this 35,000.
15,000 plus 11,640 plus 7,960 plus 410 gives us 35,010.
Okay.
You don't try the figure here, you leave it outside.
Okay.
Then the total of your liabilities, this 3,420, 960, 170 gives us 4,550. So net asset is total asset minus total liability.
Okay.
Your total asset is your current asset plus current liability, current asset plus fixed assets.
Okay.
Your total liability is current liability plus non-current liabilities.
Okay.
So that's total asset minus total liabilities. Do you get it? So 35,010 minus 4,550 gives us 30,460, which becomes the capital account for Rajesh. 30,460 is going to be on your credit side, because it's capital. So that's how to prepare a journal which needs a net asset. Is it clear?
Yes.
Good.